unicorn, well-funded, investment tech platforms, they really push passive funds because it kind of removes the advisory layer and makes it a completely tech-first product. Whereas, AMCs still hold active funds to be really, really relevant. So where do you stand on this, and where do you see, how much will passive funds eat into the share of active funds in, say, a decade or so?
Sure, Pranjal. Thanks. Now let's take a step back and look at how the passive fund started. Now in US, or where there is a mature market, where the industry's GDP is growing at 2-3%, and where the companies are growing at 7-8%, which is a good growth from their perspective. But we are in a country like India. A GDP per capita is $2,000. 65% of population is less than 35 year of age. We in this forum are talking about millennials who are higher risk taker. The India growth, the companies who are doing well in India can grow at 15 to 20%, and not just for 1 year, 3 year, 5 year, probably a decade. In this kind of market we are present in, the construct is such that it's all about active fund. Passive fund is a learning we learn from developed market very fast. It's a trend which we follow from hearing people what people that globally talk about. But India is all about active fund today. At least when the GDP is going 7-8%, good companies will grow at 15-20%. Better company can go at 25 to 30%, and not just for 3-5 years, but for from a decade perspective. So I am all about active investing. The other part which I would just like to add to the discussion, which I just saw you guys coming, I mean, millennial people less than 35 years of age, I think 80% of investments should go into equity, various form of equity, mutual fund, VC investing, startup investing, wherever they can, and whatever the risk profile allows them. I think the Indian market is in such a sweet spot that if they are able to invest rightly for 10 years, they are going to make money out of investing. The fund which I manage, the Builder Gen Next fund, it's about next generation fund. I try and capture the story where next generation will go and spend. So we own recent amount of QSR, we own Mall, we own Nest Tech company, and that's where we try and identify the trend. So the answer to simplify what I've said is all about active investing, greater allocation to equity, and compound your wealth for next decade. And it's for you to be select the right fund to invest in.
So active investment across categories, be it large cap, mid cap, small cap, or more of multi or flexi across categories.
I would say more of multi and flexi. Large cap,
Right.
probably after a company reaches a certain place, the growth can be at 13 to 15%, but mid cap, small cap can grow strongly. So flexi, multi cap has to be active investing. Others probably, I mean, I come from a mutual fund platform, but I would say can some part go to large cap ETF? It can probably, because sometimes it's difficult to do active investing and capture some stories which you can't capture. That's where passive investing comes in.
Oh, absolutely. I'm so happy you said that. My two favorite categories in active investment is flexi and multi, because that actually gives the fund manager to actually show his skill and pick out mispriced opportunities. In certain categories, the hands are too tight to actually be able to generate alpha, but multi and flexi absolutely has to be active. Another trend along with passive that India is catching up to it, ESG funds. So could you explain that to our viewers? I think literacy around that is still low, and where does that fit in a holistic asset allocation strategy?
Sure, Pranjal. I think ESG. Let's understand what is ESG all about. I mean, it's a misgoverned concept, or people don't understand ESG investing. ESG is about environment, social, and governance. So governance is always was always there as an investment portfolio manager. You always look at good quality, good government company where the promoter are good. They follow a discipline on capital allocation. They follow a discipline on creating a moat of the business, creating a successful business. So that governance is already there. Now, environment and social. Now, people, specifically millennial, are more conscious about the environment and social aspect of and rightfully said, because if you don't if you hurt the environment today, my kid or the millennials kid will not be able to enjoy the world as much as you and I are able to enjoy. So someone who is investing in say a electric vehicle, someone who is investing in something which is degenerating plastic and focusing on environment friendly, those investment will always succeed, because as a consumer of those, I will give a higher weightage to someone who is able to tell me why they are doing what they are doing, right? So millennials of today are more aware. They are there in the tech platform, in the social platform. They talk about things happening, and where the consumer habit changes, that's where the fund has to change, and that is where some funds are just focusing on ESG investing, because by nature, if a consumer habit is changing to identify companies who are able to catch the trend, those companies will grow much superior over longer term. If those companies will grow superior because consumers are trying to identify people who are talking about future and talking about good trend in the environment, those will succeed, and that's where ESG fund is trying to pitch in. The fund will invest only in the sector or places where companies are more focused on sustainability, on environment, on governance, and that's where these companies will succeed over longer term.
So I invest in ESG out of my consciousness, out of my ethical and moral thought process, but not necessarily as a means to, I shouldn't look at ESG funds that are better in terms of financial returns than a multi-cap or a flexi-cap fund. That's not the right way to look at ESG funds, right?
So by nature, Pranjal, I'm trying to say ESG fund may give a. I'm saying may. I'm just emphasizing ESG fund may give a better return than multi and flexi cap fund, because what will ESG fund do? They will try and invest in company or more ESG compliant, and if a trend of consumer habit is shifting to a ESG compliant companies, that means that lot of if today I am a ESG compliant company, let me think of example. For example, I am a EV company. If people are moving from a petrol to a EV vehicle, that means that the EV vehicle will grow faster. If a company grows faster and throws a decent amount of cash flow, the stock price will reward them, and stock will give a higher return. So by nature, a ESG company over longer term can give a higher return, because consumers are moving to that direction, and companies will grow higher, and the cash flow generation will be higher, and the profit growth will be higher. So there are two aspects to it. One, if I am ESG as a person, I'll invest in ESG fund, and probably ESG fund by nature can give a longer return over longer period, may give a better return than even flexi and multi cap. If environment moves faster, the pace of movement of the environment has to be captured. The trend is for sure there, but we'll have to see how fast this trend moves on.
Oh, nice perspective. I mean, I never thought of ESG funds this way, that it makes sense purely from the financial standpoint, personal finance standpoint as well. So nice perspective. I'm sure it's a huge add-on to our viewers. With this, we come to the end of our discussion. Unfortunately, there are time constraints. Thank you so much, gentlemen, for adding value. It was really insightful. I had a great time moderating it. I'm sure you had a great time. And I'm sure viewers had a blast. It was really, really value edited for them. Thank you so much for taking your time out, and it was a wonderful session. Thank you.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.